Good morning. Today is Thursday, November 13th, and the we are officially open for business now. The government ended this shutdown yesterday, the longest shutdown in history. Um, but that shutdown cost us apparently $1.5 trillion, so I'm sure that's going to impact things for us. So, government shutdown, even though it is over, it's still going to take a while for economic data to come filtering in. So it's probably going to take a week or two for things to start, for everybody to get back in and start compiling data. Hey, good morning, Anthony. Good morning, Chris. So nothing to go over today, so we can get right into our broader markets. So we're in a chop fest like we thought beginning first couple weeks right now. Hopefully things will balance out and find some direction. Before I forget, please like this video, subscribe to the channel if you're new. I know you guys are not new; that you guys are watching right now. So ES right now did some analysis of the ES. I do not like strong upside until we can break and hold above the 6909.50 level. Ideally, for the ES, we have this little gap down here, 67.72 down to 67.56.50. I think that would be a pretty nice pullback before we could start heading upwards. So whether we get that, I'm not sure when we get that, but I think we start heading down in that direction. I think that would be a good level of support. So my bias today, I'm not looking long unless we can pop and get above that 6909.50 level. But it's been weird, very choppy market. The broader market's been rallying, and the tech stocks have been kind of chopping around and not doing anything. So you could just see this kind of like choppy area that we have right here. So 68.49.25 is a level. We lose that level, I'm going to get rid of this. Now, 68.35, I'm actually going to get rid of that level because I think if we lose that level, we're going to come down to the 68.12. It's going to be that first level of support. And then if we lose that, I think we're going to come down to the 67.92.73 first. And then if we lose that, then we fill this little gap down here. And then I would look for some support in that area before we could start moving higher. Let's get into the NASDAQ. NASDAQ, similar chart here on the NASDAQ. So we're below the 20-day SMA on the NASDAQ here. So you can see we're starting to fade a little bit in the pre-market here. And here's yesterday's lows. If we lose yesterday's lows down here at 25,488.75. I think we can go down to 25,452 first, and then of course, then we come down to that 25,394, which is the previous all-time high set back in October, and then same thing on the ES. An ideal pullback would be to fill this gap down here at 25,269. All the way down here to 25,201.25 would be an ideal pullback before we could start heading upwards. Same thing on the upside. I don't like upside until we can get above this 25,880, and then we start pushing higher. But I think that we're going to have to pull back a little more to create a little liquidity. So that's pretty much my bias on the broader markets. Let's get into Tesla. So let's look at, let's pull out a little bit on Tesla here. So Tesla yesterday, I had a bullish bias, and that is now gone. Based on everything pulling back here. I thought a bull flag was setting up here, and now we're starting to lose that. So like what I was explaining yesterday, a bull flag is you have the pole right here, and then the flag start to develop here. But you can see we're losing that right now. and we're below the 20-day SMA. Now we're losing the 50-day SMA here. Yesterday, November 7th low is down here at 421.88. There was an initial gap fill down at 402.43, and I think though if we lose this level down here, that's, I would say, 396. I would say, let me just plot this out here. I would say, actually, I don't even like that level either. Just remove that price level. That's better. If we lose this 390, if we do break this and lose this 314.53 level, we quickly move down to 402.43, and then if we lose this 396 level, I think we're going to come down here to this 100-day SMA at 375.49. So now I've got a bearish outlook on Tesla right now based on everything pulling back. However, it's still kind of chopping around here right now, so you got to be careful, because what was created yesterday, and I'll show you, is this sell-off right here above this. Let's go right here above this 434.33. If you look at this candle, it's straight downhill. So like on the open yesterday, I had a long bias yesterday. I thought Tesla, had some good buying at the tail end of Tuesday, and I thought Tesla was going to head up towards this 20-day SMA, and then right out of the open, it just plummeted. So what happens is, so now you've got all the shorts down here. So everybody's short in this position right over here. So if we regain this 434.33 level, this creates a speed zone. All these shorts are going to start to panic, and it creates a squeeze. And so then we could quickly move higher from there. Do I think that can potentially happen today with Tesla? You know what? You never know with Tesla. So you have to be prepared for anything. So I'll leave that 434 level in there. But right now you can just see that Tesla is definitely trying to push lower right now. So I've got this was an initial gap. So now I've got it as a red rectangle. So if we do pop up into this level, and if I do happen to get long, I know that I better get out of my longs, right? But I'm not thinking longs today on Tesla. What I'm actually probably going to be looking for is, if it does pop, then I'd be looking for shorts. So right now you can see we're below the 50-day SMA at 427.33. We're below the FMOC high that was back in September 17th at 428.30. So you can see we're failing these levels right now. So there's really no reason to be thinking long when the market's pulling back. It's you're almost getting in front of a falling knife. So you have to be careful when that's happening, because especially with Tesla, when Tesla gets going, it really can eat your heart out. So that it's good to have like I always say, it's good to have a bias going into the market, but you have to recognize what the market is giving you when you're trading, and understand price action while the market's showing what the market's showing you. So let's go over some POC levels. I haven't been speaking about those in a while. So we leave the point of control levels are these yellow lines, and I leave them open until they get hit. And earlier in the year, back in January, there was an open point of control level at $416. So Tesla opened the year up, back up at like in the $400 range. It pulled all the way down to like 270, 280, I believe. And I left that point of control open, and then it finally got hit. If we can go back and look here, 180. So let me just see how far back I can go here. Where are we here? 5.7. Okay, so yeah, so you can just see this is March. This is March of this year. Tesla, it opened up the year. Let me just see if I can go back. I'll go back a little further. We'll go back 380. So this is Tesla, January 1st, $411. It opened up. It created a, actually, let me see here, 1231. So it closed 409, and that created a point of control level up here. It's gone now. But I left that point of, oh, actually, you know what? Here we go. So it created a point of control level right up in here. I left that point of control level open. And you could see from here, and I think it was on January 7th, you could see, oh, maybe it was a little higher. Okay. So there was a point of control that happened, and it was at $416, what I can remember. And I think it was probably right in this area here, January 24th. So then right up in here, we didn't really, I don't believe we got back up in there. I got to find that level when we just went straight down here. So it's probably right in here. This is the, maybe this is it right in here. This is it right here. So I left this point of control level. You could see, I'm going to mark this big. So right here, that point of control level, I left that open. And why is that open? Because it created a point of control, and then after market, it never came back and touched this level. And so now that created an open point of control. So I left that level open. And if you watch, it's still open, and Tesla pulled all the way back down here. Still didn't get back up there. It's up at 417. And look at how far down Tesla went. Tesla pulled all the way back down here. Now we're down here to 210. I'm not sure if 210 was the low. Here we are in March, 220. And I think we start moving higher. 240, yeah, 220, 240. So now I left that open, and then it finally got hit. I believe we start moving higher. I think September, we finally get up there. Boom, right here, September 15th. So that point of control was open for 9 months. Okay, and now why am I showing you that? Well, I'm showing you that because currently now, where we're at, we have point of control levels that have been open now down here since September 12th. Point of control. Let's see if there's first one here. There's the first point of control down at 417. There's one here from September 12th down at 394. There's one here down at 365 from September 11th. And then there's one down here at 334 from September 4th. So I leave those point of controls open until they get hit. So any bulls out there that are watching this, you know, there's a strong possibility that when Tesla pulls back like that, we could hit those levels. I mean, Tesla's had a $220 range this year, so it's very possible. So you have to be prepared for that. So right now, my long bias on Tesla, it's over until we can recapture some of these levels. And so you have to go one level at a time. And right now, we're losing the 50-day SMA. We first level we lost the 20-day SMA up here at 445.82. Now we've got resistance levels up here between 432 and 435. Now we lost the 50. So now we're approaching some lows here. If we lose these lows, there was a 421 level, 421.88 low from November 7th. And then you've got some highs here to contend with. So you're going to get some reactions off of these levels, and you have to pay attention if you lose those levels. So a big level here is this November 4th previous all-time high at 414.50. That's a big level. If you come down here, I expect that it comes down here, you'll get a reaction of it. But if we blow through that level, then I think that we're quickly, I'm probably going to remove that 409.67 level. I think we're going to quickly move down to that 402 level and then down to this 394 if we lose those levels. So you have to be prepared for whatever the market is going to show you. But right now, its market is showing me weakness. So I am not thinking strength until we can regain these levels. But even if we regain these levels today, I am still going to be wary of this resistance here, because you can see right here, we popped above these levels. It became support, was support, we lost it, and now we're rejecting this level. We rejected it again in pre-market here. So I have to anticipate again that we could potentially reject it again. Now, on the flip side of that, if we pop above it and hold above it, now this rejection area becomes support again. But right now, we're below these levels right now. So I'd be looking for maybe a little push to the downside in the morning, and then push back up to these levels for another rejection to push down further. So that is my bias. However, we are still very much chopping around today and these first couple of weeks. So that combined with the government that was just shut down, and data is going to slowly come in as they gather it, and then that combined with next Wednesday, I think they're going to have an FOMC meeting again, and I think they're divided about what they're going to do in December. I think it's poly market is at 78%, whether they're going to cut rates 25 basis points. But I'm not putting my hat too much on whatever they're going to do this end of this fourth quarter. I think Powell's days are numbered. He's going to be replaced in the first by the second quarter of next year anyway. So let's get into the 5-minute opening range trade. Yesterday was a beautiful trade. Unfortunately, my bias was wrong, so it was difficult for me to make a trade yesterday when I come into the market thinking bullish. So there was no doubt yesterday on this trade. It was a beautiful trade if you were not, thinking long. Because what had happened with me on the open, this created this 5-minute opening range trade, which was 442.33 for the high and 437.15 for the low. And so when it made that range and then we started wicking here, I thought this was going to be a fake out to the downside based on these 1, 2, 3 wicks right here. We were going to start moving higher. I got long here, and then I was wrong, and I ended up losing money on the day. So, but then on this wick, on this candle right here, this should have told me we're going lower. And as you can see, if you took the short yesterday, you would have been rewarded handsomely. The break on that was 437.15 on the low side. We did get down to, we broke the 50-day SMA at 427.33. So, you pretty much, you made yourself, $10. That's a handsome day on the downside. So now today, just wait for that break. You don't have to trade right out of the box. Wait and see what the market gives you. Sometimes if you wait patiently and not click the button early in the morning, you can see what the market's going to give you, and when it gets exhausted, and then you can take your trades. As far as my strike prices I'm going to use today, I'm going to have the 415 puts, which expire tomorrow. And then I'm going to have the 430 calls, which expire tomorrow as well. So the 430 calls, the premium closed at $6.70. We are currently about $5 lower, so I anticipate this to open up probably in the $4 range. And then this 415 put, I anticipate this to open up in the high twos, maybe in the $3 premium range. Anyways, please like the channel, or like the video rather, subscribe to the channel, click the more button down below, and join the Discord channel. I'll be in the live trading room from 8:15 a.m. Central Time to 10 a.m. Central Time. If I don't see you in there, I will see you tomorrow.